JPMorgan just came out swinging with this massive prediction. And honestly, it's kind of insane. They're talking about $14 billion potentially rushing into XRP and Solana. Yeah, you heard that right. Billion with a B. Let's dive into what this could actually do to these two assets. The post highlights a major prediction from JPMorgan Chase regarding the potential impact of spot ETFs for XRP and Solana on the crypto market, specifically the bank forecast. The newly proposed XRP and Solana ETFs could draw a combined $14 billion in inflows within the first year if approved by regulators. JPMorgan's ETF inflow prediction analysts project that spot ETFs and XRP and Solana could effectively see $14 billion. For XRP specifically, the inflows could be between $4 and $8 billion. Here's where it gets even more interesting. They've already bumped up their estimates from $3 to $8 billion to $4 to $8 billion for XRP alone. The floor just went up $1 billion, people. These numbers keep creeping higher. Now listen, we won't really know anything concrete until these ETFs get the green light and actual money starts moving. Everything at this point, pure speculation. Could go way beyond these numbers, could fall short. Nobody's got a crystal ball here. You're seeing this forecast everywhere though. Watcher gurus all over it. Every major crypto outlet is buzzing about it. They mentioned some past examples in the article, but I want to switch gears for a second. There's been this huge security breach. Client data leaked everywhere. Makes you wonder, right? When's the industry finally going to wake up and start using blockchain tech to lock down people's information? Anyway, we've also got some clips queued up from Blackstone Capitalists plus more XRP analysis. Today's kind of an everything in the kitchen sink situation. Let's take a listen.
Who else is under an NDA? Okay, I think what we've got now is a stall. The big banks are trying to accumulate XRP, and not just BlackRock. That's not a bank. It's a disgustingly corrupt private equity firm. They're going to tell Ripple, help us out so we can get a boatload of XRP under $3. Mm-hmm. We don't want to buy it at 7 or 8 where it should be right now. Can you help us out to keep it under 3?
I mean, who really knows what's cooking behind those boardroom doors, right? Is that the actual play? I'm going to be straight with you. It sounds kind of wild to think these heavyweight financial guys are literally huddled up scheming about how to tank prices just so retail investors can grab XRP on the cheap. That narrative feels a bit far-fetched to me. Now, has market manipulation happened throughout history? Yeah, for sure. But is that the game being played today? I can't say with any certainty, folks. Anyway, let's talk about this breach. JPMorgan, Citi, Morgan Stanley. Looks like their client info potentially got leaked through some third-party vendor getting compromised. And here's what really gets me. As processors get faster and faster, as quantum computing edges closer, every one of these old school centralized databases becomes a bigger target. Throw AI-powered hacking tools into the mix, which are already here, by the way, and you've got a recipe for disaster. These legacy systems are basically ticking time bombs. That's the whole argument for why blockchain needs to happen yesterday. Think about it. Your health data, driver's license info, financial records, tax documents, everything should be living on immutable, decentralized networks instead of sitting in some company's vulnerable server. This screenshot highlights a major data breach impacting JPMorgan Citi and Morgan Stanley clients after a hack of their technology vendor, Sitmus AMC, that occurred around November 12, 2025. According to reports, sensitive client information connected to residential mortgages and broader financial records may have been exposed, though banks have not confirmed the scope of the impact. This incident has prompted warnings that from these institutions have raised fresh concern over the integrity and privacy of customer data and legacy financial infrastructures. The breach underscores the limitations of centralized databases and vendor-reliant systems, which are susceptible to large-scale hacks through single points of failure. Blockchain technology offers several enhancements to data privacy and security to financial services. Decentralization spreads data across multiple nodes, reducing the risk of a single compromised server, can expose all customer information, Encryption and privacy. Blockchain transactions use advanced cryptography that can be designed with selective transparency for compliance, keeping personal identities hidden while allowing audibility. Immutability and reduced fraud. Okay, pause for a second because this is actually mind-blowing. So when you're shooting money across borders and it's ping-ponging through multiple banking institutions, guess what? Every single bank in that chain gets a peek at your personal information, right? Your data is getting passed around like a hot potato. But what if, and this is the game changer, you could authenticate yourself and verify the sender without actually exposing any of your sensitive details to this whole network of banks? That's the magic we're discussing here. Immutability and reduced fraud. Financial records and blockchains are nearly impossible to alter retroactively, improving data integrity and reducing risks of tampering. You see what I'm saying? Because right now, there's always someone with database access who can fiddle with records, change numbers, manipulate entries. On blockchain though, good luck with that. You'd basically need to be some kind of superhuman hacker mastermind to pull it off. I personally haven't heard about anyone successfully going back and altering blockchain records after the fact, but hey, never say never. Maybe someday someone cracks it, right? Operational resilience reduces reliance on intermediaries and legacy vendors that are often foreign weak links in the supply chain. While blockchain isn't perfect or unhackable, it raises the bar for attackers and supports both privacy and regulatory compliance when designed correctly. Okay, you're gonna love this next bit. Robin Vince coming in hot. This guy's the CEO over at BNY. And we're not talking small potatoes here. They're sitting on 53.8 trillion in assets under management. Oh, and they're partnered with Ripple. Listen to this.
Can you go into digital assets and sort of this trend toward tokenization and how that plays into the business model a bit?
Yeah, sure, Carl. It's a really important trend. It's one of the mega trends. We identified a series of mega trends about a year ago, and we said we want to position our business, invest in those capabilities that will allow us to benefit from those mega trends. Because while we want to drive and are driving organic growth, we also want to make sure that we're attaching ourselves to these big market cycles, and digital assets is one of them. Now, that's not just stable coins, it's also tokenization, and it really is across the ecosystem. So we've been investing around the ecosystem for using our traditional assets and then evolving our traditional business assets to be able to be on-chain as well.
Perfect, that was solid. Now let's jump into the next thing. Franklin Temple, new CEO, sounds the alarm. The dollar's dominance is being chipped away, and the world urgently needs a sovereign, neutral, free-floating currency to interoperable with all the others. All right, I'm going to play this one for you right now. Take a listen.
Look, dollar dominance, I always come back and say, well, where else are you going to go, right? So start with that. And, you think about the reserve currency, you're looking for stability, you're looking for strong economies, you're looking for a trust. You have to have a free-floating currency, capital, you can't have a lot of capital controls. So I don't think there's a question about the dollar dominance. I think there's a question about how much it gets chipped away, right? And you definitely see that. And you see that, and honestly, I actually think there's a lot of discussion about how tariffs and can you trust the U.S. has impacted it, but I actually go back to in talking to some central banks, when Russia invaded the Ukraine and the U.S. froze assets of Russia in U.S. dollar, there was this, this could be us. And so I actually think it started a little bit there where people said, okay, we need to start to diversify this a bit. And then you've obviously had the comments on, how can we trust the U.S. in how they behave in certain ways. And you see it, right? You see, like when when Russia was taken away from SWIFT, you now see contracts being done. India's buying oil from Russia in rupee, denominated invoicing. China and Russia are operating in the yuan. So that's the chipping away component. You still have the dollar dominance.
All right, check this out. She just dropped a ton of information, but let me break down what's actually happening behind the scenes. Right now, countries worldwide are side-eyeing the United States big time. Here's the deal. Cross America the wrong way, and suddenly you're locked out of the global payment network. Imagine waking up and realizing you can't move money anymore. Your entire country just got financially frozen. can't buy stuff from other nations, can't sell your goods. You're basically stuck in economic quicksand. This is precisely why BRICS is scrambling to build their own system. That gold-backed currency everyone keeps talking about, that's their escape plan. And notice how the yuan's showing up everywhere now? The rupee too? All these alternatives are popping up because nobody feels safe anymore. The trust factor? Gone. So here's where things get interesting. What if there was a bridge currency that didn't belong to anyone? That's the real game changer for global finance. Let's be honest about the dynamics. China's not touching US dollars if they can help it. Russia's definitely not cozying up to the yuan. No way. India? They're not backing the yuan either. The ruble sounds better to them, obviously. See the pattern? Every country's playing the same game, pushing their own currency to win globally. So wait, if everyone's suspicious of everyone else, how does anything actually work? This is getting wild. US banks are now sitting on $395 billion in unrealized losses in Q2 2025. Yeah, this keeps snowballing into something scarier. At what point does the whole thing just collapse? Let me simplify this mess because honestly, it can twist your brain into knots if you're not careful. Here's what's actually going down. The Post explains that the second quarter of 2025, that US banks collectively have about $395 billion in unrealized losses. In simple term, this means that these banks own a lot of assets, mostly bonds and mortgages they bought when interest rates were lower that have dropped in market value. Cast your mind back to 2020. The planet went into lockdown mode. Everything froze, and interest rates tanked to practically zero. Free money was everywhere. Banks jumped at the opportunity and bought mountains of these financial products. Then rates climbed like crazy, and now those same investments they snatched up, they're worth way less. New bonds are paying 4%, even 5% these days, yeah? Whether your bonds are paying 1% or 2%, you might think, who cares? But here's where it gets wild. Scale that up across massive holdings, and suddenly you're bleeding billions. That's the hole we're staring into right now. But because they haven't actually sold these assets, the losses are only on paper for now, which means the damage is still sitting there, waiting. It's like a ticking time bomb of unrealized losses. What are unrealized losses? An unrealized loss happens when an asset owned by a bank is worth less now than what the bank paid for it, but the bank hasn't sold it yet. Most of these losses are from bonds and mortgage-backed securities bought when rates were low. As rates rise, these old bonds become less valuable. When do these losses materialize? The losses become real and realize only if banks are forced to sell these assets, such as if they need cash quickly because people withdrew too much money. And here's where things get interesting. Japan's already showing cracks in the foundation. Picture a row of dominoes stretching around the globe. Japan tips first, starts selling US treasuries. The UK spots that and freaks out. China catches wind and joins the fire sale. Suddenly, everyone's dumping bonds like they're toxic, and prices crater even harder. Those paper losses, they're multiplying by the second. Now here's the nightmare scenario. Everyday people catch on and start yanking their deposits because they can smell smoke. It's like pulling cards from the bottom of a tower. Everything's propped up against everything else. Those losses balloon into the trillions, and that's when the whole structure implodes. That's the moment everything gets wiped clean and rebuilt from scratch. You know all that chatter about the Great Reset floating around? This mess right here is fuel for that fire. So how do we crawl out of this hole? What's the actual game plan? There's no easy fix, but banks can try to avoid selling these assets at a loss by holding them until they mature. Look, these bonds come with all kinds of timelines. You might see 5-year deals, 10-year stretches, maybe even 30-year marathons, depending on what got purchased. Every bank's got a different clock ticking, but the play is basically don't touch them, let them ride out to the finish line, and you sidestep the bloodbath. Regulators monitor bank health and capital buffers to make sure that they can handle risks. Some banks also hedge interest rates risks. If banks need cash and must sell, it could realize losses hurt its earnings. And at the worst case, need to raise new money or get help from the government. All right, enough of that doom and gloom. My brain needs a break. Time to shift focus. There's actually a fresh tracker that just launched. But you know what? Before we get into that, I've got to pull up XRP's real-world use cases because this is worth seeing. When we're talking about a world where trust is broken, how do you rebuild that trust? Well, could start with Ripple and XRP. So ETFs are landing, and honestly, this is where things get wild. Institutional cash is about to crash the party in a major way. Picture this, $60 trillion parked in traditional markets suddenly has a green light to dive into crypto like XRP. That kind of capital shift? Unreal. Meanwhile, treasury operations and debt management teams are practically sprinting to nail down their crypto strategies because regulation stopped being a maybe and turned into a when. Corporate America is having a moment. Ripple's already 3 steps ahead. Evernorth decided to play ball. Webis hopped in. Vivo Power's lurking around the edges. Not gonna lie, jury's still out on that move. Worksport joined the club. Hyperscale is positioning for something big. It's turning into this full-blown race. Here's the catch though. Company drops news about crypto investments and suddenly retail investors lose their minds like, quick, buy their stock before they load up on XRP. The frenzy kicks off instantly. But hold up. Talking about investing and actually cutting the check are 2 completely different games. Those announcements, they're appetizers. The main course hasn't even hit the table yet. Don't confuse the menu with the meal. Plus, XRP EVM, XRP ledgers connect to 55 different blockchains. So listen, you've got Axelar Bridge doing its thing, Peerless in the mix. I mean, we're looking at Descent, Andros, Strobe, all these pieces moving at once. Stablecoins everywhere you look. RLUSD, USDC, XGD, Europe, USDB, and that's just what's live right now. Japan's knocking on the door. Africa's practically already stepping through. Meanwhile, bridge currency keeps humming along, moving money across borders with that on-demand liquidity setup. Think about what XRP actually does. It's sitting there like a translator between any 2 fiat currencies you throw at it. People keep asking where the trust factor is. Well, there it is, staring back at you. Tokenization side of things, Ondo's moving, Arcex is in play, OpenEden, Guggenheim, they're all active. What bugs me is how quiet everyone stays about Flare and these whole DeFi ecosystems sprouting up left and right. Charles Hodgkinson's over at Cardano building Midnight. And look, every single one of these developments pushes XRP's value trajectory upward. Basic supply and demand says when circulating XRP shrinks, price climbs. That's just how it works. And now yields entering the picture for XRP holders. You'll actually see some interest rolling in. Honestly, the fact that you're here right now absorbing all this while it unfolds, that deserves recognition. Day in, day out, you're staying plugged in, and that matters. It grabs you, doesn't it? Like this pull that keeps you coming back for more, because deep down you feel it. This narrow slice of time might actually be your ticket out. Everything else in your world gets quieter when you see what's possible here. Lightning doesn't strike the same spot twice, so steal whatever moments you can and wrestle with what's building right in front of us, because years evaporate faster than you think. Suddenly it's been 18 months, 2 years even, and you're standing outside looking in. This is the opening. Regulatory frameworks are racing toward the finish line. Once they cross it, brace yourself. Insurance giants pour in, the top 1,000 projects get their stamp of approval, masses of people flood the space. Think about your next software update on iPhone or Galaxy. A crypto wallet just appears there automatically. Every person on Earth with a smartphone can instantly beam you digital currency or tokens. If you're sitting around waiting for that to feel normal, the golden phase already passed you by. Franklin Templeton and Grayscale are rolling out ETFs today. What kind of chain reaction does that set off? Tomorrow, I'm going live as events unfold in real time. Breaking developments, fresh intel, the complete picture. Don't miss those sessions. Grateful you're here navigating this with me. See you in the next upload.